In today's video, I'm going to take a quick look at the dollar and gold. Uh, Most of the time, gold moves inversely to the dollar. I don't see any evidence at the moment that that is um, that correlation is breaking right now. So we have potentially an intermediate bottom here. So let me widen this chart out just a little bit. Now, if you'll remember, I have posted this bull market trend line several times as a potential spot for this intermediate cycle right here to bottom. The other potential spot for a bottom would be right here at this triple top support zone. My first expectation was that we would break through this zone here and we would come down and tag this trend line before the intermediate cycle bottoms. But as of the beginning of this week, I think I'm going to be wrong on that call. It's starting to look more likely that this intermediate cycle has found a bottom right here in this support zone at this triple top. So moving back to the daily chart, when we got this undercut right here, that was the potential for the dollar to start a 5 to 7 day bloodbath phase that could have taken us down to that trend line, but it didn't follow through. It didn't even follow through that day. Reversed immediately, formed a bullish engulfing candle here. We got follow through on today, and the futures tonight anyway look like it's likely that we're going to continue to go up. So if we do break above this peak right here, then that would be confirmation that this was indeed an intermediate cycle low. And right now I'm anticipating we would get a top right around the FOMC meeting. I believe it's on the 21st. Let me check that. That is correct. The FOMC meeting in March is going to be on the 21st. The Fed intends to raise rates. Nothing in the futures market indicates any different. The odds are very high that they are going to raise rates in March. So that would be the most likely spot for a new intermediate cycle to top and then roll over. So we would presumably have at least one right translated daily cycle. Maybe it rallies up to this support zone right here, which of course wouldn't be much of a rally over the next month. And another potential spot might be right in this area here around 91.8. But we are confirming a bear market. We are making lower lows at the intermediate degree and lower highs. So this rally, if this does turn out to be an intermediate bottom, the rally out of that bottom should not come above this high here. It should not make a higher high before rolling over. So I'm going to say probably about 92 is probably about as far as we could expect this to go before rolling over and then starting the next leg down. So assuming that the inverse relationship between gold and the dollar holds, and at this point I don't see any indication that it's not going to, that means that we have completed our intermediate top during the first daily cycle, exactly the same as this intermediate cycle here. And I warned people that this was a possibility. We got our first daily cycle low. This is the second daily cycle, which appears to have topped in a left translated fashion without making another higher high. And that is another confirmation that the dollar probably did put in a slightly earlier intermediate cycle bottom than I was anticipating. So instead of tagging that trend line like I originally expected, it appears now that the dollar is just going to complete that intermediate bottom as a double bottom right there in that support zone where those triple tops occurred 4 or 5 years ago. So that means it's probably unlikely that gold is going to find a final intermediate low until we get, into the middle or latter part of March. So there's no need to try and pick a bottom early. I've explained before that these intermediate cycle declines almost always have a three-wave pattern down. You'll get an initial move down. In this case, I would expect that we would at least see gold come down to test this 1300 to 1308 level. We're probably going to get a pretty convincing bounce off of that level. That will convince a lot of gold bugs, people that just don't understand what is happening. It's going to convince a lot of people that that was the bottom, and then they'll buy into that bounce, and then they'll get caught by that second leg down. I tried to warn people that was happening here during this intermediate decline. When we got this bounce, a lot of people started buying here thinking that was the bottom, and I tried to warn people that just almost without fail, an intermediate cycle will have at least a three-wave decline, an A wave down, some kind of bounce, and then another wave down. And it doesn't have to be three waves. It could be more than three, but it almost always has at least three. So trying to buy before we get a second leg down, it usually just ends up being too early. So for people that are anxious to start buying the precious metals, I'm going to say you've probably got about a month yet before we can hope for a final intermediate cycle low. We're going to have to break this zone right here for sure. We've got to make a lower low. So I think that's, you can pretty much bet the farm on that one. But we may get a bounce. And I would say the odds are very strong that we're going to get some kind of bounce once we get into this support zone between 1300 and 1308. But just don't let that bounce fool you. That's not the bottom of the intermediate cycle. It's just a counter trend move, and then we would get another leg down probably into March, somewhere around March 21st, and then the odds would be much greater that would be the final intermediate cycle low, and that would be the spot where you want to back up the truck, so to speak, on precious metals and metal positions. I do not think that this decline is going to drop below the July low right here. This was the yearly cycle low for gold. I'll widen this chart out just a little bit. So here was an intermediate cycle low. This turned out to be the yearly cycle low for 2016. And then the next intermediate cycle low occurred here in July. So since that was the lowest intermediate cycle decline of the year, then this becomes the yearly cycle low as opposed to this dip in December, because this dip did not drop below the July low. So as long as gold continues to hold this pattern of higher yearly cycle lows, then the bull market is still intact, but we are still in a very difficult trading range where we're just not getting any follow through to the upside. We're not getting any follow through to the downside. It's just a very choppy, frustrating mess. And so that's probably going to continue. But, for people that are wanting to to buy the metals, I think you just don't need to be in a big hurry. Middle of March, a day or two on either side of the FOMC meeting would be the most likely spot for a final intermediate low, and we're going to need at least a three-wave decline before people even think about trying to pick a bottom, and we will have to break below this low. We will need to have a failed daily cycle. So this low is going to be broken. More than likely, this support zone between 1300 and 1308 will also be broken before the final intermediate cycle low is complete.